Welcome back after the Australia Day long weekend. We're looking at Gary Glover's Tuesday report. What we've seen is the markets have started to come back down, and this is fitting into the blueprint, the calendar year 2025 report that Gary looked at last week. So an interesting review into that. But we're going to have a look at how that market stacks up today and some interesting trades on the table. Good morning, Gary, or afternoon, I should say. How are you?
Yeah, no, I'm pretty good, Chris. Yeah, interesting weekend for the markets and interesting day today.
Definitely is. We had that long weekend. President Trump's now in and tweeting and proposing tariffs and ramping things up quite quickly. So how are you seeing this? Obviously, you've got the portfolio that we're scrolling through on the screen now. They're the positions, the past positions, the closed ones are a different color to the open ones. The colors kind of speak for themselves. Portfolio. So we had a few people ask about that. But when you look at the market, and now we've got the NASDAQ on screen, is anything changed since we sort of looked at your blueprint, your roadmap for 2025?
Not much there. I mean, look at it. There's a bit of a catalyst of the weekend. Obviously, DeepSeek, which is a Chinese potential competitor to NVidia, has kind of spooked the market a little bit over the weekend. So I think like NASDAQ futures are off 1% on Sunday and ended up down 3.5%. NVidia was off like 7-8% single night. So pretty big move for one of the biggest moves for like a pretty large cap active stock. So
it was possibly the largest one-day drop in history from a market cap side of things.
Yeah, so it's a pretty decent move there. So this spark, definitely caused a reaction. There's quite a few sectors that are sort of reacting to that as well. So interesting there that sort of come on the back of the NASDAQ kind of retesting that sort of 20,000 level again. So it's funny, just looking at all these sort of expansions there, Chris, that we've found resistance at those key markers there. So 20,000 for the NASDAQ and then 45,000 for the Dow. And we've gone to that 6128 or 6122 I think is the 500% expansion of that range there. So it's sort of showing, I was highlighting that when you see big expansions of those old ranges there, and on that S&P one there, I thought it might get to 6140 or something like that, but that would be the 100% expansion of the previous range. But that 2007, 2009 bear market, everything has expanded off that range. That's been really the trigger from like the 15, 18, 20, 24 high here. So it's just everything has expanded off that range, and each of those expansions have ended up, capping the market for at least 6 months. So if not sort of slightly longer there, but all those expansion points there have sort of kept the market at bay here. So I just think that they're really key levels there. And we've got all indices getting them now, all sort of all together at the same time. So this just tells me here that we've sort of got, really big resistance here, kind of right now on all the indices. And history tells us there that we're probably going to spend at least 6 months, staying underneath those. So interesting thing is there, if you look at that 2025 forecast I did last week there, it does sort of it does kind of support that. If you look at the first quarter, we normally get a bit of a choppy broadening pattern there. So you can notice S&P pulled back and then expanded to a slight high and then it's kind of started to pull back here again. That was sort of something which did happen in most of those 50 years and a lot of the post-election years as well. So this tells me we've got a bit of resistance here. We're probably going to go through some sort of consolidation here. So I think at best here, we're going to go sideways to probably slightly downwards here. We don't have, the interesting thing is we don't have too big a corrections in those 50 years or in the post-election. So we might come back, I don't know, maybe you'll get a 5% correction or 8% pullback there, but we typically don't see big pullbacks. They're just, again, they're still fairly constructive years overall. Tend to finish the second half pretty strong. We are in 50th year of the decade, which is historically one of the stronger years on the decade, but we do have a Republican president going back. Although it's not really first time, it's still after being out, he's still a new president again. So they typically have the weakest performance when looking at, the different categories. I won't say different types, like different categories. So, but it just sort of does suggest we might just drift off here. But it's weird. I just don't sort of see us having a big correction across as well. So just think we're going to have a really, potentially going to have a bit of a time correction here. So maybe we'll sort of pull back, I don't know, 5-7%, something like that. Look, you might get something slow. I just can't see anything too large here. I think Trump's going to be pretty pro market here. So it's just a lot of forces that'll be seem positive there. But I just think it's going to keep the market sort of in a fairly tight range here. So technicals are saying market wants to come back. But I think what's happening in the market there is probably, it's quite supportive and maybe positive. But I think we just might get a correction in time here. So just our cycles just suggest we might get a little bit of weakness there. So that's right. I think it's going to go here. I mean, I think financials and growth stocks are still fairly highly priced. So that's probably the most vulnerable there. But if I look through commodities and, apart from gold there, I think everything's fairly, we've got low multiples, high yields for a lot of the commodity stocks. And we still got a bit of inflation around. So should be supportive for higher commodity prices and therefore higher returns. So, and you've had the currency as well here. So unless the Aussie dollar has come back and retested like a 3-year low and not followed through and actually reverse there. So that's potentially where the Aussie might get some support there. So that could be quite positive for commodities as well. So it's interesting now. It's definitely seeing some sectors showing up here as some opportunities. But yeah, there are some risks as well. But I just think this market might drift here. Might be some, might be just sector rotation again there, Chris, as well. So see some sectors weaken off, some sectors do some lifting here. But yeah, I think it's going to be sector and company specific opportunities.
Well, as you mentioned with the sectors and the tech coming off Chinese company, showing that they were able to deliver cheaper chat features like ChatGPT using technology that was not NVidia based technology. So that put the sort of awareness, alertness, and nerves through a lot of those AI stocks. You're talking about sector rotation. Obviously, the NASDAQ is that tech heavy. The data that you've got and you've been talking about for this 50, 60, that kind of thing, that goes back a long time. The SP&P500 is a more mature index in that sense, obviously more diversified.
Yeah.
Would you see that as, like, obviously that blueprint is the same thing. We're seeing sort of a correction in time, possibly for the first 6 months of the year, and then we could see that stronger second half if that plan A sort of unfolds from the blueprint or the roadmap. Any difference to the
S&P has really been the strongest one there. That's the one. I mean, like the other markets have all expanded out, the key levels which they normally would expand from. But if you look at a longer history there, if you go back and look at that 07, 09 bear market on the S&P, then look at every range expansion since then, they've all been like a really important expansion point. So, we saw the 61.8, so the 100% expansion, the 200, the 350. So now we're at the 500 again, so, which happens to coincide with 100% expansion of other range as well. So we sort of, like when you've got a body of evidence or, telling you some history there, that's been really important. And then you've got other ranges squaring out pretty much within 10 or 20 points of the same level as well. That's telling you to be pretty cautious here. So just the technicals are telling us there that the market should have a ceiling here, like for the next 6 months. It probably shouldn't break these levels here, which does match up. Yeah, I mean, it matches up with our typical 5th year and also the typical post-election year cycle as well. So yeah, so I think the first few months of 2025 could be a bit erratic here. You can obviously see why, and you've seen here over the weekend how jittery the market is, and just that NVidia effect there's it's flowed through the data centers, flowed through the uranium. One little Chinese company has sent ripples through probably 3 or 4 different sectors across the market there, and seen, as you say, one of the biggest market cap declines in the history of the market. So, yeah, interesting.
Oh, one announcement, one news.
Yes.
But it could be the critical news announcement that changes the shape of AI and being US centric, or is it actually quite global? So, yeah, to be seen, really, isn't it?
Yeah, look, I think it heightens can sort of see that, our cycles are telling us the first quarter could be quite volatile here. Now we've got Trump in here. So, yeah. The odd thing is he's not even responsible for this one. So, yeah, there's going to be sort of tariffs ahead, and so it just kind of it's going to be quite a choppy period here, I think, for the first few months here. So, I'm still hopefully looking for that March, April low, Chris. That would be the ideal setup. So, see whether we get that or not. The inverse cycle of that is what I prefer not to see, but that might happen as well. As we'll see what happens.
So obviously the Australian, you mentioned the commodities having a different run at the moment. You've talked about rotation in sectors. The Aussie you talked about in the blueprint, a little bit different to how the US markets have and the expansions and so on. So anything different on the Aussie now, or it's still steady as it goes from what we've seen? Obviously our market's not moving anywhere near as much as what NASDAQ did.
Yeah.
Right.
But so far I've held that range. I think we'll see a bit of a consolidation there. Look, we might even break that range there, but I can't get too negative here either. So, I think we could see a bit of a choppy period. Like maybe we tighten up here, Chris. Maybe we'll go sideways, do a big VCP or something up at the highs here. Just maybe some sort of range like that. I mean, there was a period there a few years back where we had those like 18 to 22 weeks or sort of. Yeah.
A very tight range for about
yeah. So it wouldn't surprise me to see something like that. So yeah, I mean, even some of those, like even that B cycle, we saw the market go through. It was choppy, but tighten as well. So yeah, I know we could get something like that as well. So it's weird, sort of not being. Like I'm a little bit negative there, but I just don't think we're going to see a big pullback. So I think it's just going to be like a tight. Yeah, I'd be right. Any sort of big caps here that have a good pop here, I'd be probably writing calls against them. But yeah, I saw 2 good VCPs today, Chris, on some what I consider to be larger cap stocks. So still seeing some setups here. So yeah.
I guess that fits into your rotation of the markets, because as the other ones are rolling off, the opportunities are coming up, and that is why you do this report, to understand where the strength is, where the opportunities are, and understand what's behind it. We'll have a look at some of those individual companies in a second. Just to round out the indices, the Dow Jones, look, we talked about the NASDAQ, the difference between the S&P. Aussie's obviously different. Anything extraordinary happening with the Dow Jones, or it's still fitting into that blueprint format?
Yeah, look, I mean, this is probably slightly more negative there. The Dow Jones obviously was up last night, while the NASDAQ was off quite a bit. So sort of, we saw some money coming out of growth and going into sort of maybe more value orientated shares. So that, not to be too, surprised there, but it's just, the technical picture there does show a bit of a break of that downtrend, and we often will go back and retest the break zone, which it's done here. So nothing out of character here so far. I do think that range has that 45,000 there is a key level, and I could see it easily coming back, and like over the next 3 or 4 months, it might tighten up here and congest it, maybe come back to that 150 sort of level there. I was at around about 41,000 there. So, but yeah, I think it might, the whole thing could just tighten up in here, Chris, as well. We might get that's the way I'm thinking. It's just not going to be too negative here, but not struggle to get going as well. So I think it might be a grind here. I just think we might go through a tightening phase here. We've been through a few of them, so I can definitely sort of, we go again here, but I just think it's, I like the markets. Yeah, look, valuations are high for a lot of sectors, so I can see some congestion there, but there's still some sectors that are definitely showing, like there was 2 or 3 sectors still showing quite, some strength to me. So I thought, well, okay. But yeah, I think we're just, looks like we're just going to congest, So we typically don't see big declines in all those cycles here, the fifth year and the post-election year. So yeah, I'm not expecting a big drop, but I can see us go through a consolidation phase here for the next few months into a March, April sort of window.
Well, then, if that's the case, and we might not see the indices shoot through the current ceiling that they've created 5-6 months, we want to know where there are opportunities in the individual components of the ASX. And you've got in the charts here, the first one, you've got Flight Centre. So scrolling through to that, you've covered corporate travel a fair few times. We've talked about the benefits of not raising capital throughout this COVID period, when many of the international competitors and domestic competitors did raise capital. Flight Centre in slightly different place. So where it is right now, how's that looking as an opportunity for you?
Yeah, I think this got sold down overly aggressive there on the update there, October. And, there's a bit of an acquisition there as well. But yeah, as a result of that, I overshoot there. We've now had a bit of a bounce and a congestion. And now we're starting to emerge, we're starting to break through the first lower high there. So again, you sort of got that bit of a VCP there, or you've sort of got that lower high there after the first higher low and just sort of coming through the other side. So I just think that's kind of constructed. The volume's okay without being awesome here, but we are coming out of a low volume seasonal period as well. So you just got to put that in context as well. But this looks like it wants to rally here and pop out of here. And I noticed that Qantas has still been pretty buoyant. Corporate travel's been pretty strong. Even Webjet has burst to the sector. So the sector is looking pretty robust. So that's what we know from our studies, Chris, from meta studies, is that the sector's pretty buoyant, and the stock's showing strength. That's what you want to be. You don't want to be in a weak sector in a strong stock. You want to be in if the sector's showing some strength there, that will sort of add to your probability of it moving higher here. So I think this looks quite good there. Just quite a few of the other names are looking pretty positive as well.
Well, Dicker Data you've got in there, DDR, obviously completely different kind of the market, but it is exposed to some of the AI componentry you were talking about. And we did see that those ripples in the pond shake from NVidia through to the different sectors of the market, as you were talking about before. Dicker Data, Aussie based, but the cloud is everywhere. How do you see this chart unfolding, fitting your blueprints, the sector rotations? What do you see here for Dicker Data?
Two things obviously on the weekly there. We've potentially got a first high low after having that deep low back in 23. We've come back and retest a little bit. We've stayed just above that, and now we've sort of started to break out of this little descending wedge here. So might be a first high low. It's bizarre, the stock here, Chris. I think prior to 2000, it sort of ran with the market, was a bit of a leader there, and then post COVID there, it's kind of running out of cycle. So it tends to sort of find the lows, kind of when the market's sort of at highs here. So this is definitely one that I traded out of cycle last time, when the market was looking a bit negative, and it had a pretty strong run through that period there. So look, it's more sort of hardware, IT sort of services in there as well. But I mean, the stocks, I think 15, 16 times there, the yield's around 5.5%. So that's it's a reasonable PE there for IT services company. They've still got a bit of growth in it. So, I thought it looked pretty interesting there. I did notice that Data 3 as well was another one that was sort of starting to emerge as well. So it's, again, I just try to look for the sort of sector to sort of see whether stocks in the same sector are sort of showing or emerging or showing some strength. So, it's a few stocks. I mean, look, Technology One's TNA's been running for quite a while. That's had a cracking run. Been a bit of a leader there, but these two have been sort of left behind. But just think there's just looking sort of promising there. So I thought it looked okay here to me.
Well, another one in a completely different part of the market. You are talking about physical components and talking about housing communities, aged care, semi-retirees, that kind of thing. Lifestyle communities has been through a bit of a tumultuous movement. The share price on your weekly chart here shows touching through $20 back in late 2022, start of 23. So where we are sort of trawling out a bit of a bottom between sort of the 8 and 9 period, touching down into the mid 7s, sort of the lows of last year. it's at the bottom end of the range. It has been beaten up a little bit. So why is
Yeah, I'm
it?
trying to, I'll be trying to avoid buying lows here, Chris, because momentum has been driving the market lower than normal. And then same token, stocks have been running higher, have run probably higher than normal as well. So there's definitely seeing some momentum here. But what we want to sort of see is really see some sort of rally there, hopefully a little bit of impulsive, some volume, and then put in a first higher low and then start to emerge from that higher low. That's kind of, if we're sort of waiting a bit more patiently for some strength to be shown there, that's what we want to sort of see here. So trying to be a little bit more patient there, trying to wait for these things to emerge and sort of show a bit more, just because we've seen a few things go a bit deeper. So just like what we're seeing here, we've had a nice rally, some good volume come in. It's consolidated for probably at least 2 or 3 times as much time and hasn't gone to a new low, and it's stayed in a pretty tight overlapping. And then they're just starting to sort of pop through there, and just a bit of volume started to emerge out of Chris as well. So that looks pretty constructive to me. So definitely price action is improving there. And I think just the last couple of years, it's sort of shown. It's if you're a little patient there, wait for some first signs of strength there, and wait for that higher low, and then come through that higher low emerge. That's been a safer place to enter. So it feels like a sort of safer place to be looking at this stock here.
Although it's something that we've both studied a lot and you talked about a fair bit in the reports, is that 360 comes to mind for one of your trades where you were identifying a company that made a higher low as the market was making its lows. Now, at the time, we didn't know they were the lows. Your blueprints, your roadmaps had said it's probably going to be in October, and it was. So you put together the roadmap as thinking, well, I think the market will low in October. Here's all my reasons why. 360 had been falling and had fallen earlier than the market, but then had rounded out a bottom and had made a higher low before the rest of the market made its actual low in October. So I've seen you do it before, and you were sort of looking at these companies that were coming down, but it's like you were creating your playlist of possible candidates who could be rotated into as favorites as that transition of sectors happens. So while I'm not saying LIC is definitely going to be the next market leader, is this the type of setup and framework that you look for as the market sort of turns south? You look at those that have already sort of built a bit of a base and had some formality happening there?
Yeah, I mean, there should be mostly, if we are looking for those stocks to show a little bit of relative strength there, I think this also looking for the sector as well to show some strength as well. So that is interesting. I did notice that quite a few of the property trusts have sort of been holding up quite well as well over the last sort of few weeks and month there. Just a few of them sort of have drifted back here, but haven't sort of gone to new lows and stuff. They just seem to be supporters. I was looking through a lot of the REITs and stuff there. Look like sort of like a lot of base building going on there. So don't know if I was sort of not seeing the super strength there, but just not seeing the weakness in the sector as well. So definitely showing a bit of strength versus the overall market, which has sort of pulled back a bit. So yeah, just that property sector sort of suggested to me just to keep an eye on that. So definitely showing a little bit of strength there versus the overall market as well. So, but yeah, I think LIC is interesting there because we've seen something like, that reminds me a little bit of that coding chart a year or two ago, sort of how that, that was a little bit out of favor, sort of cracked through and then sort of started, did a bit of building phase first. And then once it sort of broke through, to a new high there. So it was I think coding, I don't know if it was a 52-week high or not. There probably was a 52-week high, but it did sort of, just build a bit of a base and then things sort of keep going there. So yeah, just think LIC looks pretty constructive here. So
Yeah, well, LIC's looking constructive. I completely agree and see what you're talking about with that. The rally and then the consolidation is at least 3 times as long, hasn't held sort of the top half of the range. It's coming back out the top half. But you've got CIP in the report as well, Centuria Industrial REIT, 3 guesses for what that company does. This has been within sort of range bound, 280, 360. You've got them highlighted here on the charts. It did sort of, this is quite possibly a sort of a Is that a false break, a retest of the low? How close are we to that October low in the recent periods? And is it important, or is it the overall structure you're looking at?
Yeah, look, you've got a few things there. You've sort of got that ABC, kind of post the low as well. So, so we've sort of got our washout and that sort of, September, October 22. But then since then, it's been sort of has been going sideways there. But we do have a bit of a higher low in there as well. So just has that appearance of a bit of a base there. Definitely seeing volume elevated here over the last month or so. So much as we take out the Christmas period there, sort of prior to Christmas and then post Christmas there, we're seeing definitely a little bit of some volume here down around that, under 290 there. So just, it could be, again, just sort of showing signs of kind of base building characteristics here. So just notice a few stocks in the same sector, Chris, was sort of standing out. So, the property trust is not a sector I normally go looking at too much. So when I see a handful of names all sort of, kind of showing the same type of sort of setup there, or showing a bit of strength there, do pay attention, particularly when the market's a little, some of the other sectors are a bit weak here. So we are sort of trying to look for some sectors that might be a better move here. So,
and we are hearing that CPI figures to come out, if they're 0.6, it's sort of borderline, whether there'll be a rate drop. 0.7, it's kind of out of the question. 0.5, well, a lot of economists are thinking if we get that 0.5 reading for this quarter, a rate cut could be on the cards, and the rate cuts generally work well for the property and the REITs, don't they?
For sure there. I mean, it's
so that could be an unknown, a sort of a surprise catalyst currently brought forward if they've built the base. And as you're saying, within the sector, you're seeing a fair few candidates within that group actually shape up.
Yes.
Surprise relative strength movement at the start of the year when the rest of the market's not expected to move until May or June.
Yeah. Well, I think most of the other CPI figures and like around the world, they've all sort of come in line, or at least maybe on the sort of lower side there. So even the US there, which was sort of slightly over there, when they looked at that across the board and still view it as being still a good result at the end of the day. So so it's look, you definitely can have a bearing there. I personally don't see rates moving too much in Australia, but I guess the market can get excited if they think that that inflation's definitely buried and maybe rates can be cut here. I know Albanese would love to see a rate cut before May, so government might be pushing for that as well. So, but let's sort of see here. But it was funny. I noticed it was, I think Codem was must have been around about March 23 there, where it had a pretty mean downtrend. And it bounced and then congested, then came through. That might have been when it was around about, I think, $6 there, and kind of it did push through that, go another leg, and then it had another consolidation and another leg. So it's interesting here. That's definitely one to keep an eye on, that LXC. That sort of looks, can be a little bit tricky to trade there, not the most liquid there. But yeah, that does look constructive there.
Well, that's always good with your playbooks to look back through those previous ones to understand how the patterns and setups can unfold and what we can look for at the other end to set our expectations. So to that end, you've compiled the research for us. You've brought up some charts that will teach us something about the current market situation, the current rotation within the sectors, and the opportunities ahead of us, and how to really understand what they can lay out for us. So we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.